Well, as the war enters its third week and the strategic Strait of Hormuz remains blocked, oil prices are hovering around the $100 a barrel mark. We can cross now to Chief Market Analyst at GTC, Jameel Ahmad. Thanks for your time. Jameel, the latest state of play then on the global markets.
So we're still continuing to see the oil price hover somewhere around $100. So the asset's still up around 50% year to date. But of course, this market is still very sentiment driven, and depending on which headlines come through, the oil price remains very much volatile. Of course, over the past week, we've seen the oil price range from $80 to $115. So we can't say with any conviction or confidence that we're going to stay at a certain level. As for on global markets, we're not quite yet seeing the sell-off that we could expect, considering the uncertainty that's taken place in the world. Nonetheless, we are seeing some weakness in global indices, and should this situation continue into the third week and potentially beyond, then I would expect to see some more weakness across global markets.
Indeed, we are day 17 now of this war, Jameel. Are you seeing any trends from investors?
Apart from the sensitivity around oil price, I think what has been particularly interesting is actually the move higher we've seen in the US dollar, the greenback, as a safe haven asset and currency. The US dollar index actually broke out of a range that's been in place since approximately August of 2025. And as we speak now, it's at its highest level in 2026. And I think that this is based on central bank expectations. Now that there's uncertainties happening, that I think that the US Central Bank are very unlikely to decrease interest rates any further in 2026. Also, I just think that the dollar is a safe haven currency, considering the geopolitical environment. It looks like it's going to be more encouraging for traders to look for it as a safe haven asset.
Jameel Ahmad, Chief Market Analyst at GTC. Thanks very much indeed for joining us. Much appreciated.